Units versus houses. Which one is a better investment? In this video, I want to cover off the pros and cons, look at some historical numbers when it comes to data, and how these two dwelling types have performed over time. And I also want to share with you exactly what my thoughts are when it comes to buying property today. If you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, all things personal development and financial freedom. Now I run one of Australia's fastest growing buyers agencies, Search Property, which focuses on helping people scale up their portfolio. So if you're interested in knowing how to scale up, how to get a strategy and really dominate when it comes to building a portfolio with real estate to then eventually retire early, then you can use the link in the description below to be able to book a free call with my team to be able to discuss all of that. Now, when it comes to houses versus units, which one is better? I'm gonna tell you the short answer, which is it depends. Now, if that was the end of the video, it'd probably be about a minute, and I wouldn't do that to you guys. I value your time. So let's jump into some numbers, look at what the pros and cons look like, because at this point, if you're seriously considering a unit or a house, you pretty much know what you're getting, but there might be a couple of things that you're not aware of. So that's what I want to do, is share my thoughts. Now what we've got here is the Ray White Economic Update by Narita, who is a chief economist at the Ray White Group. I want to go through what her thoughts are about houses versus apartments, which 2014 purchase would have paid off better today. So we're looking back retrospectively 10 years ago, which one would have been better. Now the debate between choosing a house or an apartment continues to challenge home buyers, each option presenting its own set of trade-offs. Houses typically offer more space and privacy, but often at the cost of a less central location. Apartments, while generally smaller, frequently boast prime urban positions and lower maintenance responsibilities. But beyond immediate lifestyle consideration lies a crucial financial question. Which choice would have yielded a better return on investment over the past decade? The answer, not surprisingly, depends on where you bought. To answer this question, we use Neoval data to see what a house priced at $500K in 2014 would now be worth compared to a unit purchased at the same price. While nationally, a house purchased at this price has performed better at a capital city level, the results are more nuanced. And we're going to pause before we go into the actual numbers. One of the key points around buying an apartment is because you want location. Now, if you looked at, say, Sydney and you wanted to be about 2 to 5 kilometers away from the city, it would be almost impossible to buy a house. One, because they're way too expensive, and two, because there are so few of them, it's actually impossible to buy one. So in that case, if location is important to you, you may decide, I need to be able to buy an apartment. I would go on to challenge you with that and say, there's no reason to buy, you can also rent in that location. Now, if you want my deep dive around renting versus buying, you should definitely go check out this video. I only made it a couple of days ago, and I think it's going to bring you a lot of value. Now, another really important factor that she's brought up in this argument is around return on investment. When you go out there to purchase your own place, you're really going and finding a place you want to live in. That's emotional. But what people do, humans are greedy, and we all do it, is we say, well, if I can live here, and I get the bonus of the property going up in price, well, now I get best of both worlds, right? Well, yes, in theory, you're correct, but that's like finding a unicorn. To be able to find a property that you can live in, enjoy, and it's the best asset type in that area, and it also happens to be the best location for growth. That really is quite difficult. And right now, when you're looking at most apartments where they're getting built out, it's not like it was, say, 10 or 15 years ago, where you could only, say, build up maybe 50 to 60 apartments. Now what happens is in those locations, a tower is gonna have 300 on its own. There's usually like 10 towers also going up around them. So the supply that can come onto the market is so much greater now than it was in the past. Now let's look at the price trend of a $500,000 home in 2014. In the yellow, we have houses, and in the black, we have the units. And what we can see is they seem to follow the same direction. However, the results are completely skewed. When you look at what they were in 2014, 2015, you pretty much say they're about the same at this point, given that you purchased at the same price point. But what you can see is 10 years later, the house on average would be worth $920,000, whereas the unit about $700K. And that is a big difference because in 10 years, that's the difference of more than $200,000. If you think about $200,000 over 10 years, that would be $20,000 a year in tax-free equity, which means really you'd have to be making an extra $40,000 pre-tax to be getting those sort of gains. And that's why it's so important that you find the right dwelling type in the right area and you focus on the right locations. Because at the end of the day, real estate is a location game. But I would go a step further to say it needs to be unique. Because there are some units out there right now that are performing way better than houses. And I'll tell you the example because it's so logical. Let's say you go and buy an apartment that is a set of maybe 50, 60, even less than 100, and there's only those 100 that can look out to the water, or something is unique about this location. If the council or developers come in to really go and build out some more, they would be inferior because they may have prime position to the beach, or they might have location views that no one else can get. Then in that case, those units are unique and it will see price appreciation. Now, if you go and compare that to, say, a house, because someone's come onto this video and said, yes, I knew it, the houses are better than units, let me go and buy a house. If you go and buy a house in one of these estates that are new, they're all gonna look the same, right? We all know the Truman Show, you go in and all the houses look the same, it looks like a set. Now, I've got this conspiracy theory that we're in the Truman Show and that's where we're headed to, but that's a whole different video if I ever made one. But people go out, justify buying a house there because it's a house, and I definitely know it's gonna outperform a unit. Well, in this case, which one do you think will perform better? I'm in the camp that that unit is going to perform better because it's unique and is something that no one else can get. When you think about these cookie cutter, Truman Show type estates, if you can't buy that house, you buy the one next door. And guess what? The biggest issue with something like this when it comes to houses as well as units in big blocks is that if yours is not unique, then all it takes is for a couple of people to have to sell because of outstanding circumstances, and unfortunately that is the comparable that the bank is going to use, as well as agents, as well as buyers, to justify what price your one is worth. And trust me, it's not fun when it happens, and when we see the next correction, we're going to see a lot of this starting to play out. If your property is unique, yes, it's harder to get the valuation because there's less comparables, but it could also mean that you could go to different banks and get the best valuation. When you go out there and say, well, my house is very similar to 5 others that sold, it doesn't matter what bank you went to. Yes, they're going to differ a little bit, but the reality is that is the data, that's what they're going to use. Now, on average, a house purchased in Australia at 500K in 2014 would have increased by 84% to 921,200, while an apartment purchased at the same price would have increased by 40% to 700,400. However, the gap is greatest in Sydney, where the house would have almost doubled, while the unit would have only increased by 37%. A similar situation occurs in Brisbane, where the gap is also wide, a house more than doubling compared to a unit increasing by 53%. This is all going back down to location and what we're going for. Now, something else to consider is that Sydney is a really big place. So there are all these suburbs within Sydney. There are going to be some where the council allows for, more development depending on their zoning. And then there's going to be other areas that offer unique views or proximity towards the beach, which then also skews the numbers too. But if we're looking at this, we can see Sydney houses 97.4% growth, Brisbane 105% growth, Melbourne 78% growth, Adelaide at 99% growth, and everyone's favorite, Perth, which is the talk of the town, 49% growth. And I know people would say, well, it's actually not growing as fast as the others, but what you got to factor in is that it came off a really big high around that time, and that's why these numbers don't look as impressive. You also have to factor in that it's a large part of our country that hasn't been taken care of, and now the government is starting to go in there and invest in a lot of infrastructure. So really cool stuff happening there. And when you compare that to the counterparts in units, in all states you've seen units greatly underperform houses in those areas. Now, one of the other things you may want to consider is, as a first home buyer, you may only have the opportunity to get the grants by purchasing a unit in that area. And that's where I have a really negative sentiment towards these homeowner grants. Purely because you're incentivized to go in to be able to buy your own place, some people are making the worst decision possible. And I can show you an example of what this looks like. Let's look at Rouse Hill. For anyone that doesn't know where that is, it's in northwest of Sydney. And when you look at houses in this area, you've seen the median house price is now $1.48 million, and in the past 12 months, it's grown by 7.6%. If you look at this from 2018, the median price was about $910,000, and now has gone up by almost $500,000 over the period of 5 years, which is a really good outcome. Now, when you go and compare that, because you're saying, well, Rouse Hill's a good area, I can see houses are growing, well, surely the next thing to grow is units. And I remember over the last couple of years, there was so many companies coming out there, agents coming out and saying, oh, Rouse Hill is the best area to buy. There are going to be so many things. You've got the metro, you've got the town center, and I know this area quite well because my partner used to live in around this area. So I was always going there. And I would always pay attention to real estate because I'm a nerd like that. And I realized that they were doing some really cool stuff. I actually really enjoyed going to the town center. But what I knew as well was with the metro coming in, all this supply coming into the market, it's simple. It is all data driven, not emotional. So a lot of people got wrecked because they thought the same thing that happened with houses will happen with units. And that's exactly the opposite of what happened. What we can see is the median price for units is $650,000. Over the last 12 months, you would be down 6.7%. And if you think about buying 5 years ago at 641, 5 years later, you would have made no money. When you factor in inflation and the cost of living, you're pretty much going backwards, especially if this was negatively geared as well. When you think about it from an investment point of view, it's a 5% rental yield, which sounds really good, but when you factor in all of your strata costs and things like that, it's pretty poor. When you compare it to houses in the area, it's 3.1%. And this is why you need to focus on getting a balanced portfolio. You need to find a property that's affordable, but also gives you the capital gains as well as rental growth. And that's the sort of stuff that we focus on. It's the stuff that I've focused on in my own portfolio. And that's why I've scaled up the portfolio when most people get stuck at 1 or 2 properties. Now, Rouse Hill is just one suburb. Maybe I'm cherry picking. Now, Parramatta is another area that's super popular for a lot of people. And the sentiment is that Parramatta is the second CBD. And if you think about it for Sydney, yeah, it's pretty much the only thing that's the next CBD. And it's actually quite nice. When you go out there and you look at all the eateries, it's quite nice. Now, if you think about buying a house there, now the median value is $1.5 million. And if you had bought in 2019 or 2018, you're pretty much looking at about $1 million. So again, $500,000 in 5 years is fantastic. Your rental yield looks like dog shit, so 2.3%. Some people are now selling out of these properties or using the equity to go and buy properties that give them a good, strong rental yield. Because this to me can tell me, yes, there's growth here, that's fantastic. I'm not getting the rental growth and I'm not getting the rent that I need to be able to scale the portfolio up. So I get stuck with one property. Now, when we go ahead and look at the units, you can see over the last 12 months, at least it hasn't gone down. But if you had bought 5 years ago at 628,000, you're now pretty much looking at losing money. And when you factor in inflation, you factor in the cost of living, it's gone backwards. And one final example that I'm going to use is Melbourne CBD. It's meant to be the hub. Everyone talks about it. They say, oh, I'm going to buy property in Melbourne and look how close I'll be to the CBD. And we all know that they have a supply problem. I've been talking about this for a while. When you look at what's happened with unit prices there, again, although this number looks like it's going up and maybe we're now recovering, you've pretty much been holding through what has been the biggest boom in Australian real estate prices. And in the last 5 years, you would have lost money. You count for inflation, you count for the cost of living, and you've gone backwards. This is the importance of picking the right locations, because if you pick the wrong property in the wrong location, you're completely screwed. Ravi, you've shown me a couple of examples where the houses are outperforming, the units are crap, I shouldn't have bought a unit, but you've just also mentioned that units can outperform houses depending on locations. And I'll show you an example. It's actually my own portfolio. I've got 2 investment properties that are units in Newcastle West. When I bought them strategically. I'd never bought a unit at that point. I looked at all the data and I said, look, this makes so much sense, but it goes against my being, the fact that I want houses. And in this case, there was something unique. These were the only apartments that would have water views in this specific location. And it was very close to transport. And there was so many things happening in terms of infrastructure spending around the area. So I decided to double down. I bought the first one, and then I thought a couple of years later, if there was ever another one that comes up and there was good value, I'd buy again. And that's exactly what happened. So I've got a 1-bedroom and I've got a 2-bedroom in the same complex. Now, I've bought a unit in this area. Let's look at what the performance is. Over the last 12 months, it's gone up by 30.6%, which again is abnormal. But if you thought about it, over the last 5 years, it's gone from 657,000 all the way up to about 800,000 now. Now, why this is so skewed is because a lot of the apartments that are now coming in this area are going to not have the water views. They're not as unique. It's not a boutique unit block. So again, these numbers are skewed because there will be some that outperform and some that will lag behind. And that's why I say to you, if you're going to go out there and you're going to buy a unit, if you're planning to just buy because you think it's a good idea to get the homeowners grants, I think you're going to end up losing a lot of money. If you need help with the strategy, and I think at this point, if you don't have a strategy, you will lose. If you fail to plan, you plan to fail. And that's something that's so important when you're putting so much money towards something like this. I hope you guys have enjoyed this video. I'd love to know what your thoughts are. Let me know in the comments down below. And again, if you need help, reach out. There's a link in the description below for a free call with the team. I hope you guys have enjoyed this video. I'll catch you guys in the next one. Thanks, guys.